You know, every so often, a moment comes along that completely redefines the game in the financial world. It forces every single one of us to ask, are we just in another market cycle, or is this a full-blown revolution? Well, right now, we are living through one of those moments. The engine behind it all isn't just tech, it's artificial intelligence, and it's fundamentally changing everything. But here's the thing. The real action, the epicenter of this earthquake, isn't where most people are looking. It's not with the giants, it's in the trenches, where real fortunes are made, small-cap AI stocks.
So, let's just cut right to the chase. This is the big question on my mind, and it should be on yours too. Where is the Amazon of 2001 hiding today? Where's the next Tesla of 2012? I'm talking about that small, overlooked, maybe even laughed at company that's about to catch a tidal wave of change and completely reshape our world. The answer, I'm convinced, is hiding in plain sight, right in the space we're about to dive into.
To really get a handle on the future, you've got to look back at the past. So let's rewind the clock. Let's talk about Amazon. It's 2001. The dot-com bubble has burst and there's wreckage everywhere. Amazon was a survivor, sure, but Wall Street was full of doubt. Its stock had been crushed. I remember Jeff Bezos saying something back then that people called arrogant. He told his critics, "We are not valued by the present, but by the future we will create." Well, 20 years later, we don't call it arrogance. We call it prophecy.
Now, just look at this number. Let it sink in. A simple $1,000 investment back then is worth over $2 million today. That's absolutely staggering. But honestly, the number itself isn't even the most important lesson here. The real takeaway is this. Back when Amazon was small, it was ignored. When it was small, it was doubted. And when it was small, it was a small cap. And that right there is the entire key.
Look, the Amazon story isn't some kind of a fluke. It's not a one-off anomaly. It's a pattern, and it's a pattern that repeats itself over and over again. History rewards the investors who can see the blueprint of a revolution when everybody else just sees risk and uncertainty.
Let's jump forward to Tesla in 2012. You have to remember, Wall Street thought it was a joke, an expensive toy for rich people. At the time, its market cap was just a few $1 billion. That's firmly in small to mid-cap territory. But the smart money, the visionaries, they weren't looking at that year's car sales. No, they were looking at the trajectory. They saw the future of electric vehicles, of battery tech, of automation. And, well, we all know how that story ended.
And the pattern shows up again with NVIDIA. Go back to 2013. Market cap was around $10 billion. The market saw a pretty straightforward company. They made graphics cards, GPUs for gamers. Simple enough. But what they didn't see was that Jensen Huang and his team were quietly building the foundation for a future that Wall Street couldn't even name yet. They were building the engine for the AI revolution. And within a decade, that little gaming company became arguably one of the most important companies on the entire planet.
So here's the bottom line, the signature of every great technological shift. The giants, the big established players, they always show up late to the party. The real pioneers, the ones who actually create the future, are almost always new, small, and deeply, deeply underestimated. This was true for the internet, it was true for mobile phones, and believe me, it is proving to be true for AI.
And all of this brings us right back to that huge question we started with. The Amazon of 2001 is out there, right now. But it's not a big cap stock, it's not even a mid cap, it's a small cap. It's one of these small, nimble, agile AI companies that has the technology to set off the next massive explosion in the market.
So, why? Why are these small companies the perfect hunting ground? Well, it boils down to 3 huge advantages that the giants just can't compete with. First, it's speed. A small team of brilliant engineers can build and ship, while a massive corporation is still stuck in meetings about the meetings. Second, flexibility. A small cap can turn on a dime, pivot its whole strategy in a weekend. And third, and this is the most critical part for us as investors, is the raw multiplication potential. A $50 million company becoming a $500 million company, that's a 10x return. It happens all the time. A $500 billion company trying to do that, that's almost mathematically impossible.
And the smartest investors on the planet already know this. I'll never forget. I was in this closed-door meeting in Singapore with a major hedge fund, and the chief investment officer said something that just sucked all the air out of the room. He said, "We don't compete in big-cap AI. We hunt for small-cap AI before the world knows their name." And when I asked him why, his answer was so simple, so perfect. He just said, because alpha is found where the crowd isn't looking at.
And make no mistake about it, this isn't just some abstract theory. It is happening right now. The capital is already on the move. It's one of the unbreakable laws of the market. Money always flows toward the highest potential for growth. And the sophisticated investors, they can read those early signs, the tiny tremors before the earthquake, and they are quietly, methodically building their positions.
One of the biggest drivers of this whole thing is the potential for mergers and acquisitions. I mean, think about it. If a tiny company creates some patented breakthrough AI technology, what happens? They instantly become a prime acquisition target for a tech giant. And the price that giant is willing to pay, what we call the M&A premium, it's not some gentle 20 or 30% bump. No, in this space, it's often exponential.
Seriously, we're talking about premiums of 200%, 300%, I've even seen 500% or more. Because if a small company holds that one critical missing piece of the puzzle for a Google or a Microsoft, its value isn't based on its quarterly revenue. Not at all. It's based on its strategic importance. And that potential for a massive, almost instantaneous return, well, that's why small-cap AI has become the hunting ground for VCs, hedge funds, and corporate raiders alike.
And if you're thinking this is some rare lottery ticket event, think again. Remember DeepMind? They were a tiny AI lab out of the UK. Nobody had really heard of them. Then their AlphaGo program beat the world's best Go player, and bam, Google bought them almost immediately. Before that moment, DeepMind was a small cap. That single acquisition changed the entire game for the AI industry. We've seen this play out again and again. The lesson is always the same. The breakthroughs happen in the small companies before they get scaled up by the giants.
Let me give you another quick but powerful story. I know this forex trader in Tokyo, and his fund operates on one simple belief. AI is the trader. So they tested dozens and dozens of models, and guess which one won? It wasn't from a tech giant. It was from a tiny Canadian startup with a market cap under $150 million. Their final conclusion was blunt. This is the single best AI model we have ever seen. Just 4 months later, that little company got a buyout offer at 6 times its valuation. That's the power of having one superior algorithm.
Okay, so the why is crystal clear. The opportunity is massive, but that immediately leads to the next question from every single investor I talk to. How in the world do you actually find these companies? How do you separate the winners from the losers? Well, nobody has a perfect crystal ball, but you can learn to read what I call the footprints of the future. And you do it by looking for 3 key indicators. So here's the playbook. These are the 3 footprints you're looking for. First, and this one is huge, is real-world adoption. I mean, is a big, serious enterprise company actually signing a multi-year contract to use their product? That's a massive green flag. Second, is the technology itself scalable? Do they have proprietary data, something that gives them a competitive moat that can't just be copied? And third, is it a potential M&A target? Does this little company hold that one missing puzzle piece that a giant like Google or Amazon would pay a fortune for?
Here's a perfect example of that first footprint, real-world adoption in action. I visited an AI startup in Boston. They were working on medical imaging. I walk into their lab, and there are only 14 engineers in the whole company. 14! But they were building an AI that could read CT scans 300 times faster than a human radiologist and with higher accuracy than a team of specialists with decades of experience. You know what happened the very next month? A huge VC fund swooped in and invested $50 million. The company's valuation jumped over 400% in 60 days. That is the kind of explosive speed that only happens in small-cap AI.
The legendary trader Paul Tudor Jones absolutely nailed it when he said this: "The huge profits don't come from being smarter than others, but from seeing what others haven't seen yet." And that is the very definition of the small-cap AI space. It is a world filled with things that others haven't seen yet. It's where the future is being built, one line of code at a time, long before it ever makes the front page of the news. So when we talk about all this, we're not just talking about tech stocks or growth investing. We're talking about the great cycle of opportunity. The 1990s gave us the internet. The 2000s gave us social media. The 2010s had crypto and mobile. And now, the 2020s, this decade, without a single shadow of a doubt, belongs to artificial intelligence.
I want you to picture this for a second. Imagine you're standing in Silicon Valley. It's 1997. All around you are these small, unknown, scrappy companies. But hiding among them are the seeds of what will become Amazon and Google and NVIDIA. That is exactly where we are standing today for artificial intelligence. All around us, right now, these small-cap AI companies are quietly writing the code for our future.
And that leaves us, as investors, with a very clear choice. What are we going to do about it? Are we going to stand on the sidelines and wait until everything is perfectly clear and obvious and all the big gains have already been made? Or
Are we going to be among the first to step into this new territory, understanding the risks, yes, but also positioning ourselves for the incredible rewards?
Because here is the fundamental truth of the markets. The greatest opportunities always appear at the moment of maximum doubt. And this, right here, is that moment. Small-cap AI is not just another trend, it's the race to the future. It's where the smart money is already placing its bets. This is where the financial fortunes of the next decade are going to be decided.
And if history has taught us anything at all, it's this. Those who see the future before the rest of the crowd finally awakens, they are the ones who become the ultimate winners.